Welcome to The Explainer. Today, we're going to track the incredible ripple effect of a single political statement and see just how it can set off major economic shockwaves all around the world.
All right, so how can this even happen? Let's break it down. We're going to look at this fascinating chain reaction that all kicked off with just a few comments from former US President Donald Trump. And believe it or not, it ended up shaking everything from stocks in Mumbai to the price of gold worldwide. So it all starts with one single, powerful catalyst: unpredictability. And in this case, we're talking about statements that took direct aim at India's economy and its incredibly skilled workforce. Now, these comments weren't just talk. They were seen as a genuine threat to the stable, long-standing relationship between the US and India. And that just threw this huge blanket of uncertainty over everything, making global investors really, really nervous about keeping their money in Indian market. And boom, the market reacted instantly. India's main stock index, the Sensex, plunged 466 points as foreign investors started pulling their money out. But that leads to the big question, right? When billions of dollars get up and run, where do they all go? Well, that escape creates our first big ripple. You see, as investors fled all that uncertainty, they ran for safety. And the oldest safe haven in the book? Precious metals. And boy, did that send prices straight through the roof. And I mean, just look at these numbers. They're pretty wild. We're talking about just 1 month here. This political uncertainty alone was enough to push the price of silver up by a whopping 13% and gold by 11%, both of them hitting all-time highs. Wow. And, this isn't just small-time investors we're talking about. This is the big leagues. We're seeing major central banks all over the world trading in their U.S. bonds to buy gold because they see it as a much more stable, reliable asset in these crazy times. And this has a huge real-world impact. This quote here really hits it home. This massive price surge is pushing gold completely out of reach for ordinary people. In places like India, families save up and wait for prices to dip so they can buy gold for weddings and other major life events. Now, for many, it's just not an option. But the ripple effect didn't just stop with commodities. Oh no. That same wave of uncertainty crashed right into one of the world's most important sectors, Indian information technology. So, what was the trigger here? It was this absolutely shocking proposal targeting H-1B visas, those visas that are so critical for Indian tech pros to work in the U.S. The initial idea was a crippling annual fee, but the pushback from major American companies was so fierce that the policy did a complete 180. And get this, it happened in less than 24 hours. And what does that tell you? It's a perfect illustration of this deep, symbiotic relationship. U.S. tech giants and the Indian talent pool aren't just connected. They fundamentally depend on each other. One really can't thrive without the other. India's Commerce Minister, Piyush Goyal, had his own take on it. He basically suggested that the really harsh initial proposal didn't come from a place of policy, but from a place of fear. A fear of the incredible skill and talent coming from India. But this story is much bigger than just the US and India. Those ripples we've been tracking, they're spreading far and wide, forcing other nations to stop, take a breath, and completely reevaluate their own place in this changing world. What we're seeing is basically a global reshuffling of the deck. You've got the UK looking at this and seeing a golden opportunity to attract all the top talent the US might be pushing away. At the same time, allies like South Korea are actually resisting US pressure. And all the while, relationships with rivals are shifting dramatically. And this quote from President Putin, wow, it really underscores just how severe this breakdown is. He's not just talking about some diplomatic tension here. He's using the word destroyed when talking about foundational agreements between two nuclear powers. That is heavy stuff. Okay, so let's try to pull all these threads together. After this storm of activity, what does it all actually mean for the market, and what's the long-term view? Well, the consensus from the source material is that this market downturn is a temporary reaction. It's pain that's driven by emotion and sentiment, not by a fundamental collapse of economic strength. The core, it seems, is still believed to be solid. So what's the bottom line? The really big takeaway is that in our totally interconnected world, political uncertainty is like a virus. It can spook markets, cause a mad dash to safe assets like gold, and ultimately force the entire geopolitical chessboard to rearrange itself in real time. And that leaves us with this final, crucial question. Yeah, the immediate pain in the market might be short-term, but these events force all of us to wonder if what we're really watching is something much, much bigger, a permanent, fundamental shift in the entire global economic and political order.